Wednesday at noon, so it is Facebook Live for the mortgage firm Wellington Lake Worth. And as always, I'm here with Elizabeth Lopez and Tom Bennick. Both have been in the industry for a long time. Elizabeth from the banking world, excellent customer service. We would give Elizabeth all of our customers for lines of credit, building credit, things like that. And Tom Bennick, old school customer service, been doing this for 20 something years also. So we come in here every Wednesday at noon, and we're really just to answer any of your mortgage related questions. So bring your mortgage related questions, throw them out there during the chat, and we're going to go ahead and cover some topics. Today, we're going to do a little bit. We advertise, is it a good time to buy? And we'll cover a little bit of that as far as some ideas. And we're also going to cover a few other topics. So we'll hit a couple things from a couple different angles today.
Yeah, it's a common thing. Everybody kind of waits for the right time to buy, whether they're waiting on rates they think that might be coming up or going down, whether they think prices or houses are going up or coming down. And we're going to try to go over that. The best time to buy is, of course, when you're ready and when the numbers are right. If you end up waiting for, we've all experienced this, so I'm waiting for rates to come down. Well, then prices go up. Well, I'm waiting for prices to come down. Well, then rates go up. And the next thing you know, 3 or 4 years later go by and you're still renting and your rent is going up every year. So we're going to try to discuss today, you're going to have to be a little bit flexible. And the time is when the house is there, the product is there, and the numbers are right. That's the time to pull the trigger.
Yeah, and then also just the fact that the rate is not permanent, you're always going to be able to refinance, out of it. So even if you end up saying, that maybe the purchase price is right, but the rate is a little bit higher, you're not attached to that rate for life. No, but I've yet to meet somebody that's going to have the same interest rate for the full 30 years. You at some point you're gonna refinance, you're gonna bring your rate down, you're gonna shorten the term. You may want to remodel, take some cash out, whatever. So it all really depends on whenever you're ready. But Tom is absolutely correct. If you find the house, that's pretty much when it's go time.
Mm-hmm. Yeah, we've been working with people, some of them for years, that have been waiting for just everything to be just perfect. And again, regretfully, they're still not able to buy anything. So that's what we're going to kind of go over. The time is right, when the numbers are right, that the house is there ready for you.
All right. One of the things, that I like to look at is, and I use myself as an example, is I bought, at the crash. So right before the crash of, the 2008, I purchased a house, and but I had 4 young kids, and I needed a place. I needed the school district I wanted them to be in. I wanted to have the place that we were going to raise them in. So we bought the place and we paid $425,000 for it. It was probably worth, I don't know, it was worth 250 2 years later. But we've been in this house for 17 years and we have it about paid off, and we have a lot of equity, and I raised my family in the house, and it was a good place for them to grow up. So, it turned out when you're looking at things for long term things just are different. So, I tell people, if you only put life on hold for so long. So if you have certain things you need to do, real estate finds a way of always coming back. So my house is probably, I don't know, 650 now or so. But there was more to it than just what the value was. I mean, obviously I would have liked to bought it a year earlier or maybe a year later, but you don't know when things are gonna happen. So I run into, people that are, trying to get their family situated, get going on with life, and they're looking for the long-term thing. And it definitely makes sense. I also deal with, people who are elderly. And I tell you, I look a lot at, time's becomes very precious as you get older. And so I'll run into people that are thinking, I don't know, I'm not sure, I'll wait a little bit. And, they could be in their 70s or 80s, but they want to come down and be by their family, their grandkids. And I just think, everyone's situation is a little bit different, but I hate to think that somebody is worried that they want to leave, $2 million in their will versus, 1.9 million. So the value again of, and the importance of your time and how you spend it, especially as you get older, becomes very important. Now, it's a different story, of course, when you have no money. But, for people as you're getting older, the things that start becoming important, I think, become very important. So, you know what? You just buy the place, you move, and again, you value that time. So, I think as I get older, I see that, as more important than trying to time, a half point in interest or point in interest or, 2% on the housing value or anything like that, which is just impossible to time.
Yeah, and it's funny, like what you said, Mike, because I've had even with the timing, and I've had my oldest client right now. He was 70. He is 78, 79 years old, and first time home buyer. And the one thing that he said was, he never bought, never got married, never had kids or anything, but his thing was, he just wants to retire and not worry about rent going up, doesn't want to worry about getting kicked out. So the time, and I think just whatever your situation is, whether it's, retirement, whether it's starting a new family, you got married, you need to expand, you need to downsize, kids left for college. Everybody's got a different situation and a reason why they need to either, make a purchase or move. But there's really not like the perfect time, and there's never like the perfect situation for you to be able to do this. I mean, the only person that's going to know is just it's you. So
Yeah, we know what's going on with rents. Rent continues to go up. Insurance is going up in Florida, which means your rent is going to most likely go up. And again, that can go up not only annually, but it can go on forever. So again, once you own something, you own it, and you also get the advantage of getting the equity in the property as you live in it.
Yeah. I'll say I had somebody that actually asked me today. It was a woman, and she had said, she said, "I know you do this for a living, but I want to ask you if it was a family member of yours, if it was, somebody close to you, what would you tell them about buying?" And I said, "It's a coincidence that I'm going to be driving up to Jacksonville on Friday for my daughter who's closing on her first house." And her situation was, she's paying rent, and the rents have gone up substantially. So she's looking at rents that are going to be up over $2,000 a month, and she was at, it was about $1,400 or so. So, and she had been looking at a place for a long time in an area. So she had been having her eyes on stuff, and she found a place that she liked. And she ended up purchasing that and became a real fast close because the seller went ahead and gave some credits to incentivize a faster close. And she's going to end up, her mortgage payment will be a little bit lower than her actual rent payment. And one of the things I look at too is, as a protection, especially when it comes to, my kids, is you don't know really always what's going to happen, especially as you're young. So I'm always looking at, if she moves, she's a nurse. If she moves and goes someplace else, does she have the ability to rent it out and cover her monthly payment? And at this time, she does. So she's in a good spot, and it's a couple rooms, so she'll rent out a room to different traveling nurses. So it's a good situation for her. She found something that made sense, and she bought now. So, and again, it comes back to her. She was just done. She's done of being in the rent's going up, all the rent problems. Just right now, such control these landlords have, and it was a huge complex, and there's just not much you can do. So her situation made sense, and she's been looking for a long time, and she found the area that she liked, and then a place opened up, and she ended up getting it. So, and I have full support of her on that too. And as a father, I do worry about that stuff, but I think it was a good buy.
And that's a great example. Even with rates today, and everybody says rates are too high, or what the market is, everything is too high. Again, we do this for a living, and yet, Mike was able to get something for his daughter, and she'll get the equity in it, and won't need to worry about paying rent. So, and I'm sure the interest rate wasn't the deciding factor on whether your daughter was going to buy or not. There was a bunch of things that came into play.
yeah.
So that's what makes the big difference. Looking at the bigger picture, not just one thing.
Yeah. I mean, the goal will be that, hopefully, and again, there's no crystal ball, but, it does appear that the rate should be trending down. So we're hoping within the next, 2 years that we'll be able to get our interest rate a little bit lower, and if that's the case, then that'll be a help. But I will say, I've got to throw, this out with everybody is, you're going to start getting phone calls. Anybody that buying, that call is going to, the second you close, they're going to be calling trying to refinance you. So, fighting off that refinance right off the bat is going to be something you have to do, because it's going to be the greatest salesman out there telling you to refinance and all the money they're going to save you. But the refinance will eat up some of the equity in your house. So you want to make sure you're not going through 3 refinances over a period of a year. And
Mhm.
there are individuals out there that, their goal is to be paying themselves on the refinance and not so much worried about your finances. So you really want to be working with somebody that you trust that's looking at that stuff. And again, you can't always time the bottom, but you don't want to jump on that first refinance because there is a cost to it. And when somebody's selling you just monthly payment, just be careful on that monthly payment. It's like when I go to buy a car and someone says, what are you willing to pay? I mean, look, you're going to get me a Ferrari. I might pay a little bit more, but I'm not willing to pay for 40 years, and they just keep kicking those car payments out forever. So you want to make sure, it's not so much what you're willing to pay is if it's within what you're comfortable with, but is it a good value also?
Mhm.
So,
And you want to work with somebody that definitely could put like a side by side. Is it going to make sense for you to refi, at the time? I hate those mailers. Like I get a lot of my clients just say they'll take a picture and send it to me, and they'll say somebody wants to refinance me, and they give me a rate. Like if there's a rate on the paper, and I'm like, gosh, stop putting rates. Stop, just feeding all the false information because until we have like we see the rates too every single day. Like we look at our past clients and say, you know what, this does make sense for them to refinance or, or not yet, or, we'll do the math for you. But people get a little bit too excited. I think when, I get a lot of those pages that they send, the marketing pages. And I had somebody that I closed on like maybe like about a month ago, and they're like, oh, we could get you like a 4%. And like just went on and on about just how much money they could cash out on. Like you don't need that cash out, and you're not going to get a 4%, on that. So just be careful with what you get and what people are offering. You want to do the math. You want somebody that's going to tell you, yes, it's going to make sense or not make sense. But I think there's just a lot of junk mail that goes out, and people get excited about it, but not knowing what are their fees. I could give you a 3-4% too. Like Mike said in the past, how much are you willing to pay for an interest rate? But we're going to be transparent about the numbers and give you the right estimates and let you know if you are going to be paying down for a rate, what are you going to get that money back, your investment back. So yeah, that's something you need to watch out for.
yeah, I think we've all made a lot of banks a lot of money recently. So I get a lot of calls from people that have great interest rate, and they're looking for about $20,000, $20,000 or so. So you know what? Now's not the time. You go ahead and grab a line of credit. So I refer a lot of people over to the banks for lines of credit. Go get a
Mhm.
$20,000 line of credit. It's adjustable. Rate's a little bit high. Generally comes with no closing costs. But for right now, grab that line of credit. Do some of your repairs, and then when the rates go back down, if it makes sense, then we'll go ahead and we'll refinance you, refinance your first and your second. But I see people that have 4% interest rates, and you're trying to grab $20,000. You got a 3.5% interest rate. You're grabbing $20,000. I don't care if it's at an 8 or 9 or 10%. A line of credit at the bank. Your blended rate's like 3.7, depending on what your
Mhm.
first mortgage is. So again, there's a lot of great salesmen out there that are going to make all this stuff sound good, but you really want to talk to somebody who's going to show the numbers. I mean, our goal is I always want to be the first call. I want everyone to call me first. And if
Yeah.
I'm pointing you out to somebody else or to the bank or a line of credit or somewhere else, I just want everybody to know that I'm the first call. And I know Tom and Elizabeth are the same way with that.
Yeah, and even the banks, like every bank has different, the lines of credits work very differently. So it's not just a general line of credit, and every bank is going to do the same thing. Like I know that there's banks, and I know like Regions, for example, and I just say that because that was the last bank that that I worked for. But one of the things that I really liked about them was they do the line of credit, then they do a loan in line, so you do get that fixed rate, and the shorter term that you pay that off, you're going to get a better interest rate. So there's so many different ways that you could try to see if you need to get the equity. We may tell you this probably isn't going to be the best way, but at least, we know that we're going to be able to refinance that line of credit and your primary down the line. But every bank works very different, I've learned, and they have different features within the line of credit that, that that people just really don't know. So you got to ask.
Mhm.
Yeah, lines of credits are really popular at the bank, and of course, they're great. I think I have one. I don't know if Mike might have. I know I have one, and I certainly do use it. Um, and they are great to have. But with lines of credit, because you are in the second lien position, you got to be sure you got to be pulling like an over 700 credit score plus. And because they're in the second lien, you just got to be sure everything gets paid on a timely manner. But yes, they're certainly good to have, and they're definitely a benefit.
Yeah, the banks are. It's almost nice to send customers to the bank every now and then because those lines of credit, they're asking for you a lot of stuff. So you got to have pretty good credit scores, and they're collecting
And then
everything.
it's kind of nice because then the bank turns around and gives us the mortgages and the refis because they have a little bit of a hard time doing it.
Exactly, exactly. We'll get it.
We get you back eventually.
It's like we'll still get calls from banks. We'll get bank managers that are like, if I turn this customer over to my mortgage department, I'm going to
It's
lose the
not closing.
customer. So we get referrals from the big banks because they're afraid. Because again, we've all worked at big banks, and there's a lot of great things they can do. There's a couple of just a lot of good things they can do. But on the mortgage side, sometimes they struggle, and that's why you see out there a lot of times when customers are making offers, the buyers or the sellers are not excited about accepting the offers that are from some of these online lenders or from some of the banks. And it's
Yeah.
just that again, we can close quickly. So again, I tell people, you bring me in most loans, you made me a contract on a Monday or Tuesday, we expect that we get it closed next week. So
That's my
that's
point. It's just not a matter of us also closing quickly, and that yes, we can close quickly, and I don't think any one of us on this call are very aggressive salespeople, for the lack of a better word. It's the industry that makes us be that somewhat aggressive, because when you find the property, we want to be sure you're going to be ready to make your offer and close.
mhm.
The other thing I also wanted to point out, which is hugely important, is I've got customers that are going on like their second extension because they're just not able to close because the people that are buying their home aren't able to close. It's the communication that broke down with that transaction, and now it's really put a couple of families in a regretfully an uncomfortable situation where half your stuff is packed, half the stuff's in the driveway, the moving truck is in the driveway. That's what I'm getting at is not only do you want the right program, but you want somebody to communicate with you, whether it's good, bad, ugly, or indifferent throughout the whole process. The worst thing you could ever do really in this line of work is go dark on somebody and not answer their calls and not answer their questions. And even sometimes, yes, it may not be the best news to break to somebody, but you've got to pick up that phone and make that call in order to make things better. So it's really not just a matter of when you're ready to buy, it's working with the right people that are going to have your back from start to finish. All is great when things are nice and rosy, but when something hits the fan, you're certainly going to want somebody that's going to be able to pick up that phone and take care of it for you.
Absolutely. And speaking of like it's fact, I have to share this because I know I talked to Mike, but um the control that we have, within our 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 office or with our company is pretty amazing. Like we just recently closed a loan, a bond loan at that in 2 weeks. So, I know Mike, wanted me to share the story when we talked last week. We said this is something great that I think people need to hear because, like Tom said, it's communication. It's whatever we need to do to make it happen, we will do. Like what I love working about, with the mortgage firm versus the bank was, I had to worry about lines of credits, checking accounts, credit cards, savings accounts. Who am I referring? Am I referring investments? Am I referring this to, the business department? Is it a commercial? It's like so many things. But here, our focus is just one thing, and it's putting a roof over families' heads. And the one that we did, we closed on it last week. It was a bond loan, and it was funny because a lot of people just think, oh, it was an FHA bond loan at that. I mean, double whammy there. Yeah, and everybody's like, oh, FHA bond, that's not the way that it works. Like we just communicated with everybody. Everybody was on the same page. I think we asked for like one extension, and it was just because something very, very like little, and it was like one day off of closing. But besides that, like we received the contract April 12th or 13th, I think it was, and we closed it April 26th or 27th.
Mhm.
So that was very, very quick, an FHA bond loan. So again, like there's opportunity out there. If you want to buy, there's ways to do it. There's bonds. Is it the right time to buy? Yeah, if there's a program out there that you can benefit from and the interest rate looks great and we can close in 2 weeks and we can make it competitive, we'll go out there and we'll do whatever we got to do to make it work. So a 2-week closing FHA bond loan is doable. So and because that's just the team that we have. That's what we do.
Mhm. Yeah, the mortgage firm, I mean, compared to, Mike and I, well, we've all done, the bank thing, we've all, Mike and I have certainly ran into a situation where, it's time for closing and the bank is still asking for stuff, or you're on your way to closing and the bank is still asking for stuff, or you're at closing and you get a call from the bank. It's just not.
They're denying your loan as you're pulling up to closing. Your loan's getting denied after it was approved, but it went through QC. I remember the days when Tom says when it goes black when he's talking about where you just can't get a return phone call. So I remember calling underwriters, calling process, you couldn't get through. You couldn't get an answer. Days would go by, you couldn't get an answer back to your customer, and it was a frustrating process.
It's
Here
frustrating.
you solve.
Yeah, you need some help. You need some assistance. One person is unable to do this whole job from start to finish. Obviously, there's underwriters, processors, everybody involved. And again, I tell my kids, it's like turning the lights on at a Motel 6. Everybody goes under the. You can't find anybody to help you. And here, it's just a completely different scenario here. And I'm not trying to say everything is made in heaven at the mortgage firm, but it's darn close. Because when something does happen, you know, Mike's right there to pick up the phone any time of the day, and we know that Mike is on the phone to the corporate office making things happen. So yes, it is. I'm sorry, we're not very, like, oh, look at us, look at us, look at us. But with this, look at us because we do get it done.
Yeah, Tom, picture the days because we'll all do this. We'll text each other on the weekend like, "Hey, I'm in the middle. Can you do this?" And it's like it's almost like you almost have to stop. You're like, "Hey, if you're the first one to do this, you got to tell everybody else because 5 people are jumping out to help. We got the whole team is jumping, ready to send out a loan, pre-approval or something." But I picture like our old days back at the bank, and we don't want to call anybody out. Could you imagine on a Sunday saying, "Hey, I'm having a problem with this. Can you help me out?" There's no text. There's no text going out that's getting solved or answered, or there's nothing. There's nobody. So
You just gotta pray that somebody answers you on Monday and it gets resolved Monday, and
by
then
Friday, you're hoping that you get enough calls out and emails and leave enough messages. By Friday, you'll have an answer. You couldn't even get hold of your processor the same day.
I wouldn't even email on a Friday. I would email like late, like Sunday night, so it'd be the first email that would pop up on Monday.
Yeah.
I had that down. No, but it's really true, and I think we have an awesome team that does that. I know that I sent text messages. I think Mike, you had I think on a Sunday you sent a text message and everybody answered. Everybody
Everybody.
jumped in. Is anybody near their computer? It's like you would think like we went out on the boat fishing or whatever with the computer on us because we're always with our computers. We're always there, and it's at the technology that we have also that if you need something, whether it's a pre-approval or anything, we could do it from our phones. I mean, it's right at our fingertips.
And look at everybody's licensed. If you're working, everybody's licensed. Loan partners, processors, everybody's licensed. So there's no reason I look at other people that, they don't want to have license or they don't need or that just get licensed. Get licensed. I don't want somebody saying something they shouldn't have said. They said something about a rate. They said referred to a rate. They implied a rate. Everybody gets licensed. So it just makes it simple. It's not a it's a test they can get through. So, even if we get a receptionist, I want a receptionist license. I want everybody in there licensed. So it's everybody can do it.
Touch a little bit on the condominiums. There's some things that are going to be coming up, I think, in the next 30 days or so, as far as condominiums themselves having enough maybe reserves for future repairs. What was it? Champagne or Champlain? Was that the name of the condo in Miami?
In Miami, yep.
So, since that regretfully, but since that tragically happened, of course, now condominiums are being, looked at as far as the reserves go and repairs a lot closer than they were before that happened. So
Yeah.
there'll be some changes coming down with condos.
Yeah, I know that it's supposed to start in 2025, and basically there's more reading that I want to do about it, but from what I understand, and I know like my parents, they had a meeting yesterday. My mother-in-law, where she's at, they had a meeting, and now everybody's completely like the HOAs are just worried and freaked out about this. The way that they're doing it, I guess, is like there's a certain amount of reserves, and of course it's for big projects, so like roof repairs, like anything that's big projects. They're trying to prevent, I guess, these assessments. And the way that they're making up for it, it's either going to be that HOAs are going to be going up on condos, or they have the option to take out loans to back up their reserves. But they have to have this available. So starting in 2025, every 10 years, they're going to have the associations will be having like an audit to make sure that their reserves meet the criteria of each, condo association. So I don't know. I think just in my opinion, there's from what I've seen with my mother-in-law where she lives, it's could be mishandling of funds. It could be just trying to maybe do things that are very unnecessary, and then all of a sudden they get slapped with these huge assessments. And I think in a way, it's definitely beneficial. I think for our buyers, there's I don't know how a lot of people do it. These condos sometimes, like they have these assessments, and a lot of these people are living off of Social Security. Maybe if they're lucky, have a pension. So I think they're very tight on their funds. But to go knock on someone's door and say, okay, I need $1,000 to fix a condo. I'm sorry, a roof. This could be something that could be saving them some funds.
Yeah, you could be looking. I've seen ones where your payment could go up $1,000 a month. They could
Yeah.
drop. Some of them they just drop a big bill. So there's a lot of stuff. I mean, there's a couple things. I mean, and it's a tough one. There's a lot of deferred maintenance that hasn't been getting done. And we have on our questionnaire, it always says, one of the questions now is there deferred maintenance? Have you been notified by any agencies of repairs that need to be done? So we just had one recently where they had been notified, and it didn't seem to be terrible. It was some cracked stucco, and I mean it was some rusted out stuff on the patios, and we most likely could have gotten it done, except the report was 2 years old. So you have 2 years old of cracked stucco, open stuff. So it gives you the potential thought that you could be looking at structural type issues because you've ignored it for a while. A difficult thing though is I think in the history of condos, to my knowledge, we've had one collapse, and it was down on the sugar sand in Miami, and there was a lot of circumstances surrounding it. So now it's created a lot of stuff, for every condo. But again, the deferred maintenance, it's stuff that needs to be addressed, and this is going to be the push for them to do it. I'll say if you're a structural engineer or you're a company that does that type of stuff, you're going to have a good run for probably the next 20 years, because every condo that's been neglecting all this stuff for a long time isn't going to have the luxury of being able to neglect it anymore. So there's going to be a lot of companies that are going to do very well for many years.
Yeah, it's almost like the train has already left that station. You wait until like they did with the meltdown in '08. Regretfully, after 4 or 5 where major banks closed, now we're going to go ahead and regulate. Well, no, that's what they're doing regretfully with condominiums. They had one
Mhm.
regretfully collapse, and now they're going to crack down on it. So
Yeah.
that's what's
And it's gotten tough. I mean, we were closing a lot of. We were not having problems with condos. They were flying through. Like obviously we had a big couple of years back. It was very difficult, and we would only do limited reviews, which means on a primary residence you put 25% down. But we've been doing a lot of 3%, 5% down condos for a while now. But tough thing is, we've run insurance has gotten so expensive. I just had one where the condo was doing a 10% deductible. Fannie and Freddie only allow 5% deductible, so we can't finance that. They start doing co-insurance, which becomes other complications on insurance. So we start running into more complications on insurance. We're running into complications on, on deferred maintenance. So condos are becoming a little bit difficult. But, again, the pendulum is swung right now. There's a lot going on that they're working through. So they'll start working through some of these things, and we'll start figuring out, what to do. And then I'm sure it'll come back to, a new range. But, in that meantime, it could be difficult for condo financing, and it could be, it could potentially hurt some condo values too. So,
Yeah, so that's what's going on with condos, but don't be discouraged. I mean, keep looking at condos. If you're out shopping and you're looking for a condominium, just keep looking. Just let us know which ones you're looking at, and we'll go ahead and do the research on it and do the due diligence.
if you're a veteran, call us for those VA approved condos. There's a lot of VA approved condos. Those are nice, quick closings. So VA approved condos for veterans. If you're a realtor, get that list. Call us for that list, and we'll make your life very easy, because there's plenty to choose from. Unfortunately, FHA, I think there's about 4 of them in Florida. Maybe
Mhm.
there's 4 in the county. There's not a whole lot of FHA approved condos. So,
Usually on a condominium, you'll have
yeah. Anyways, one other, I want to take time to just touch on one other thing. Oh my, I cannot believe how many times I got asked this week. Are we raising the rates on 800 credit score customers to subsidize 600 credit score customers? And it's become very political. It's become very political, and from my point of view is I'll dodge politics with customers all day long. And what they've really done is we call it loan level pricing adjustments. And as the risk becomes greater, the cost can become greater. So if you have a rate of, and you can throw out any rate, like Elizabeth said earlier, let's say you have a rate of 6.5, maybe someone with an 800 credit score putting 50% down, maybe they get $1,000 of credits off of that. Maybe someone with a 640 credit score, putting 3% down, maybe that would cost them thousands of dollars. Well, they've taken the risk part out of that for certain people within certain income limits. Generally, it's going to be underneath the 100% of the area median income under certain types of loans. So the person putting 3% down doesn't pay more for that loan than the person who's, putting 20% down that's got an 800 credit score. So I don't know, is it a subsidy? We have other subsidies that we're giving out to multiple customers. We could have given these customers, or the federal government could have given these customers a subsidy to be able to buy the rate down, but they didn't. They just wiped out the loan level pricing adjustments. Now, who pays for it? I don't know. It's everything has some good and some bad and some ugly. But the way I look at it is, if I'm dealing with a customer and there's something available for them, I'm getting it for them. So we want to make sure that the customer understands the good, the bad, and the ugly of everything out there, because every good thing always has some unintended bad consequences. But I could care less about the politics of it. If it's helping my customer out, we're going to get it for them.
And keep in mind the bonds, those have awesome interest rates. I think they're very competitive. That does not have anything to do with the bonds. So first-time home buyers take advantage of the bond rates of the programs, because you're not going to get hit. I mean, somebody that's got an 800 credit score with a bond, somebody that's got a 640, you're going to get the same interest rate. So we're positive on there.
And lastly, it's also Wednesday night. So Wednesday night at 6:30, we have a home buyer class. So every Wednesday at 6:30, Zoom, you go to tmfclasses.com and you click and you register for a home buyer class. So just get that out there to everybody. You can hop in anytime. We have certain things we cover, but those classes are generally small. So, we're happy just to answer questions. A lot of times we'll just have conversations with a few people there. So 6:30 every Wednesday, home buyer classes. It's not just first-time home buyers. It's, somebody that might be looking at what things are out there, just a little refresher on what they need to be thinking about. So go to our Facebook, the mortgage firm, Wellington Lake Worth, like and follow. And hopefully we'll see you at one of our classes one time too.
Yep.
For
Thanks
sure.
for joining us.
All right, everybody. Have a great day.
Thank you.
Thanks.
Thanks.